Saving money fast can seem like a daunting task, especially if you're starting from a place of little to no savings. However, with a few simple adjustments to your daily habits and financial choices, you can begin to build your savings faster than you might think. Whether you're looking to save for an emergency fund, a vacation, or pay off debt, here are 7 simple ideas on how to save money fast. Number 1. Set clear saving goals. Having a savings plan is like having a custom roadmap that outlines clearly how much money you plan to save on a regular basis, where this money will be saved, and how long it will be saved for. The goal is to make saving money a key part of your daily financial habits. Your plan needs to include the frequency with which you transfer funds to a savings account. This could be with every paycheck or set dates, either weekly or monthly. When deciding on the amount to save, start with the end in mind and work backwards. For example, if you plan to save $10,000 in 6 months, this comes down to about $1,667 per month, $417 weekly, and about $59 a day. Breaking down numbers like this will reveal whether your goal is achievable or not before you even start. The purpose for which you're saving the money should also be clear. Is it for a down payment on a house, paying off student loans, building an emergency fund, or a planned vacation? The more clear the goal, the more likely you are to attain your objective. To quote successful author, entrepreneur, and speaker Brian Tracy, "A goal, however, is something distinctly different from a wish. It is clear, written, and specific. It can be quickly and easily described to another person. You can measure it, and you know when you have achieved it or not." Number 2, review your income and expenses. Reviewing your income and expenses will allow you to gain a full and clear understanding of your current financial situation and will help to identify areas where you can cut unnecessary spending and increase your savings potential. By reviewing your total income, you will be able to set realistic saving targets as outlined in tip number 1. The key to boosting your savings goal is to pay close attention to your expenses. This can be done by looking at your monthly bank account and credit card statements to start off. Once you have your data, organize the numbers by categories like gas, groceries, and mortgage or rent. There are different resources you can use to track your expenses. A simple pen and paper, simple spreadsheet, or free online resources like a spending tracker or app. Mint and YNAB are just 2 examples of these apps. You can then easily find areas where you are overspending or making unnecessary purchases. Number 3, cut unnecessary spending. It's important to identify and eliminate expenses that don't contribute to your long-term goals, as this can free up more funds for saving and eventually investing. Daily or monthly indulgences, no matter how small, can add up over time. Such expenses could be dining out or doing takeout often, or entertainment expenses. Other areas that you could be wasting money include memberships you no longer use, such as the gym, or subscriptions that have gone unnoticed for a while that no longer serve you. You should also review your fixed expenses to see if there is a way to lower the bills. These include your car insurance, cell phone plan, and even your rent. Consider making a call to see if you can negotiate for lower rates, or shop around for better rates. By following this approach, you can accelerate your savings while practicing more mindful spending habits. Number 4, earn more income. While cutting expenses is important, there's a limit to how much you can save by cutting back on your spending. Earning more money, on the other hand, provides you with a larger pool of funds to allocate towards your savings goals. It can accelerate your progress and help you achieve your saving goal faster. There are several different ways to increase your income. One way is to consider asking for a raise at your job if this is reasonable. Once you get the raise, plan on saving the increase. A longer-term option is to switch jobs and negotiate for a higher salary. Freelancing or side consulting gigs, depending on your specific skills, can be an option to bring in more income. The gig economy gives you the advantage of getting started right away with many options to choose from like Uber, DoorDash, or Instacart. There are also different online opportunities, including part-time businesses to choose from with a little bit of research and effort. Whether through a side hustle, a raise at work, or pursuing new opportunities, boosting your income will allow you to boost your savings rapidly while offering greater financial security. Number 5, automate your savings. Setting up automatic transfers from your checking account to a dedicated savings account ensures that a portion of your income is consistently saved without any effort on your part. Essentially, you are following the principle of paying yourself first. As David Bach, author of The Automatic Millionaire, puts it, when you pay yourself first, what you're really doing is putting yourself first. Rather than saving what is left over after paying your bills, following this approach eliminates the temptation to spend your savings money and while maintaining discipline in your financial habits. Over time, these automated contributions add up, allowing you to build your savings faster and reach your financial goals more efficiently. Consider using a high-interest savings account to direct your savings to and take advantage of the power of compounding to grow your money even faster. Automating your savings will create a habit of saving that will serve you well over time. Number 6, invest wisely. Once you have automated your savings and are building consistency with your savings goal, there are additional ways you can accelerate growing your savings. In addition to a high-interest savings account, a certificate of deposit, CD, works almost the same way by letting your money grow for a set period of time until the maturity date of the CD. The maturity date could be a few months to a few years out. The longer the term, the higher the interest rate payout generally. Other vehicles include bonds or retirement accounts for more longer-term saving goals. The goal with these saving methods is to let compound interest work in your favor to boost your savings. Compound interest is the interest on savings calculated on both the initial principal and the accumulated interest from previous periods according to Investopedia.com. Investing wisely not only accelerates the growth of your savings, but also allows you to leverage your money to work for you. Number 7, avoid new debt. If you choose to take on new debts, you're committing future income to paying off interest and principal, reducing the amount of money you have to save. Any new debt, especially high-interest debt like credit cards, can turn into a longer-term financial burden with the additional expense of monthly payments and can hinder your savings progress. By staying clear of new loans, credit card balances, or unnecessary financing, you free up your income to be used for savings and investments instead. The goal is to build your savings rapidly, reducing financial stress and helping you stay on track with your financial goals, ultimately leading to greater financial stability and peace of mind. These 7 simple strategies can be your blueprint for achieving financial success and saving money fast. By adding these steps into your financial routine, you'll find that building your savings becomes not only possible, but also surprisingly efficient. So, take charge of your financial future and start implementing these tips today. Comment below which of these money-saving tips you found most helpful. Check out my other videos on money mindsets. Like the video and subscribe. Thank you for watching.